Welcome back to Leading Indicator, everybody. I'm your host today, Zaid Admani, and today we are talking to Mike Belshe, the CEO of BitGo. Mike, thanks for hopping on today. I'm excited for today's conversation.
Hey, thanks for having me. I am too. It's a great time in the markets.
Great time in the market. So let's start there. It's been a pretty exciting time for crypto this entire summer, and especially today we're seeing, as we're talking right now, ETH is flirting with all-time highs right now. We've had blockbuster IPOs, where one's happening today. We've had regulation pass. We've had this explosion of treasury companies. You guys are like in the middle of this right now, at BitGo. From your perspective, what are you the most excited about right now and for the next 12 to 24 months as this momentum for crypto really picks up, especially with institutional investors?
Sure. Well, look, BitGo's an infrastructure provider. We've got self-custody wallet layers, we've got custody layers, we got services on top of that for buy and trade and lending and borrowing and all kinds of stuff. So what's exciting, it starts with the regulatory side, and we saw this, starting late last year. Everybody's very excited, new administration coming in. Look, every step of the way has been better than expected in terms of not only did we get a new administration that was willing to be open-minded, but we got one that was really embracing and pushing forward. And so to some degree, it's caught every financial institution a little bit off guard, right? Like they knew that this was going to come and probably be more favorable. They've been looking at blockchain, digital assets for a long time. And all of a sudden, it's not just a little more favorable, it's completely open. We have, Paul Atkins over the SEC saying that he thinks most tokens are not securities, whereas the prior chair was like, they're all securities and I'm going to knock you all down. I'm going to sue you. So the net result of this is that we've had a tremendous unlock, not just from the crypto side of the house, but also from traditional finance. And by the way, now we get to be where we should be. So I'm here in Silicon Valley. I've watched a few different kind of disruptive technologies take over the years. And, like back in 1995, we're at, Netscape and launching, 1.0 of the web. And what follows a big disruptor, and in that case, it was, information on the web, is this flurry of innovation activity where all kinds of businesses, all kinds of technologies are experimenting. And we look at them as a market and we say, hey, look, a lot of these are kind of crazy. They're not going to work. And in fact, there was a dot-com boom after all that innovation. But the market sorts out what works and what doesn't. All right, so back to where we're at. Because this is money, regulatory matters, the oversight matters, and we were all hampered. Like the innovation wasn't happening at the level that it should have been happening because everybody's fearful of getting in. Now, all of a sudden, that's changing. The U.S. is leading the way. They're going to allow for a little bit of innovation here. They're going to allow a little experimentation, and we're going to see tons of businesses. They're all going to start flurrying. Some of them aren't going to shake out, but this is the way innovation works, and now we get real progress.
Yeah, and so you think the biggest difference between now and the previous bull markets like we saw in 2021 is this regulatory environment where now that we have some clarity and some rules set in place and a friendlier regulatory environment, more companies, bigger companies are willing to dip their toes or maybe jump fully into the pool when it comes to crypto. And I'm sure you guys are having conversations with institutions, every day. Did that really start happening this year, or was that happening previously, but now they're coming in because they know that they're not going to get sued?
It's always been building, and it's been getting better and better. And then this year, people are like, okay, great, we're going to have to deal, we're going to be able to deal with how to address crypto. And then all of a sudden it got so good that, every day you're reading new headlines of this bank, of this broker, new products coming out, wrapping tokens on the equity side, all kinds of things. And so everybody's like, uh-oh, where I thought I might have had another 12 months to sort this out, I got to do this in the next 3 months. Right. So everybody's jumping in right now to figure out how they're going to work. So it's a good time for BitGo as an infrastructure provider. Like we help all of these guys, and we're pretty neutral. We're Switzerland and we're regulated, so we got all this stuff lined up ready to go. So yes, we're seeing a lot of activity right now.
So what does that conversation look like? So you have either a bank or an institution, they come to you and they're like, do they usually have a game plan, or are they just kind of like, hey, all this stuff is happening, we don't want to miss the boat, help us develop a strategy when it comes to digital assets? Or are they like, no, this is what we want to do, what can you guys do to help us get there?
It's a combination. So some of the parties that we deal with, they've had beginnings of strategies that they were thinking about executing, weren't quite sure where they wanted to execute. Of course, they've got their own regulatory structure and their own concerns about how they would blend these two worlds. So some of them have already got a pretty good idea where they want to go. Others are trying to figure it out, and they are looking for more help. In particular, stablecoins is kind of a new thing. We had the Genius Act just passed. Gosh, I guess it's been a month and a half now. Not sure.
Yeah, I think mid-July, yeah.
So stablecoins in general had been, again, kind of a, hey, I don't want to touch it until there's some sort of framework. And even though Genius has got more work to be done on it in terms of the regulators fully engaging and all that, it's plenty for everybody to figure out what their own strategy is. And then, of course, they're looking at what's happening in the market. And they're just like, wow, there's $250 billion of demand in the market today for these early products. And is there room for something that we can do better? So anyway, a lot of questions about how that works, what's going to happen, et cetera.
So do you think that stablecoins is going to be the entry point for a lot of institutions and corporations? We hear stories of Amazon and Walmart potentially looking to launch their own stablecoins. I know you guys offer stablecoin issuance services. Do you think that's like the first step into embracing crypto for a lot of companies out there?
It's a super easy entry point. I mean, it's a little less complicated than like just speculating on token prices and things like that. It's dollar-based, it's stable, and people are starting to understand a little bit about how banking works. And banking as we know it today is pretty much a concept that was generated about 200 years ago. You have depositories, and you take retail and business deposits, and then the bank manages lending those out. And stablecoins are better on all fronts. Stablecoins, unlike banks, are one-to-one reserved. People think of banks as being solid institutions, but that's because we had to put heaps and heaps and layers of regulation on top of it, so much so that you don't get innovation in banks. Sometimes they do a thing, I'll say like, hey, raise your hand in an audience. Raise your hand if you like your bank. Nobody raises their hand. Nobody.
Nobody likes their banks. Yeah.
So they're just better in terms of they're backed. We're going to be able to get a risk-free rate of like 4% to depositors, right? Like, so banks are taking risk and then giving you 0.15%. And you can get the risk-free rate. This is an economic term. It's not a crypto thing. This is the risk-free rate is the rate that you can get off of short-duration T-bills on the federal government. It's absolutely the same as cash. It's safer than cash. And you can get 4% from that. Short-term duration risk, like all the money's there. There's no run on the bank. Like, we don't need this, complicated bank that like has all these problems of a run on the bank because we can redesign bank. The third thing is payments. Like, look, if the banks were good at payments, PayPal wouldn't exist. Cash App wouldn't exist. Zelle wouldn't exist. Venmo wouldn't exist. Square wouldn't exist. Like, none of these things would exist if the banks had been doing their job. So banks got so complicated. And by the way, it's not all their fault. The regulatory around the current banking structure needs to be really high for a couple of reasons. One is law enforcement. You hear a lot about, you don't want to have money, terrorist financing, things like that. But the other one that's complicated is managing risk, because they are taking risk and it's not one-to-one backed. The regulators make sure that the depositors aren't going to get screwed. And we put on heaps and layers of stuff around that, which is really complicated. And in the end, it makes banks not very good. So stablecoins are going to upend all of this.
Yeah, I think that's what I'm so fascinated to see, because just using stablecoins personally, it is really cool just transferring some stablecoins. It could be thousands of dollars from one person to the next there instantly, and that is really cool. I think there's still maybe some scars left over from 2021 stablecoin era where you had some deep pegging and so there's still a little bit I think there's still a little bit of hesitation and concerns there, but you do have a good point.
Let's talk about that though. Like, the Genius Act is not talking about any kind of stablecoin. It's all open. That's not the way. It says one-to-one backed stablecoin. So there's a major class difference between two types of stablecoins. One is it's one-to-one backed, and you get regulators and auditors, and they come in. And so like we're handling the back end for USD1. We put out an audit every single month, which shows the attestation of the reserves. We can show you exactly where they are, exactly where the asset management is, et cetera. Then there was this previous class, which was algorithmic stablecoins.
Right.
Look, I believe technology can create an algorithmic stablecoin, but in general, it's way more complicated. And so, Luna Terra was a algorithmic stablecoin. Obviously, it collapsed and failed. There's high risk here. But one thing I want people to note is that Algorithmic stablecoins are not new to crypto. They exist in traditional finance as well. So for instance, when you look at US dollar around the world, you've got some countries like Panama and El Salvador, they don't even have their own currency, they just use dollars. Then you've got some countries which use a one-to-one backed dollar, like the Hong Kong dollar, one-to-one backed with the dollar. And then you've got algorithmic, like the UAE dinars, which are backed by a combination of dollars and oil reserves. That's an algorithmic stablecoin. Now, they have plenty of oil. It hasn't had a problem. I'm not trying to accuse them of being unstable. My point is that these concepts do exist. But Genius restricts us to a single class, which is 100% backed stablecoins. It's a very good, simple entry point. We can move to more advanced stablecoins later, and it should prevent the scars from 2021 preventing innovation again.
Yeah, I like that. And you make a good point about other countries just straight up adopting the dollar. I was in Turks and Caicos this summer. Their official currency is the US dollar. Like, they don't have their own currency. And I thought that was very fascinating. And that's the case, across multiple countries. But I'm curious to, like, are we going to see a wave of multiple companies, institutions issue their own stable coin? Or is this just going to be, winner take all, winner take most? Like, what benefit does a company or a corporation have for issuing their own stablecoin? Like I have $1,200 right now. Can I come to BitGo and be like, hey, let's launch a leading indicator stablecoin and then let's get it to the market? I'm just trying to understand that concept. Why someone would want to launch their own stablecoin when there's already multiple on the market right now?
So the answer is, like what I was saying, we're going through this wave of innovation where there's going to be a huge experimentation with different types of technology, providing those stablecoins, and different business models around those stablecoins. So the answer to your question is yes, we're going to see like a explosion of stablecoins in the short term. The other question you had is, will it settle down to just a few? That's also yes, where eventually those will consolidate and gel around a couple of big winners. So first off, on the explosion, there's going to be all this experimentation. Some people will give interest back. Some people will do other types of rebates. Other people will have it back to this way or that way. Other will use different types of transparency. That will shake out in the market based on what's best. The second part is about what makes a good stablecoin. A good stablecoin, is it the issuer? I mean, the issuer matters, right? You need to have trust, you need to have audits, all that kind of stuff. So you got to get that all right. But the other part that matters is the liquidity and the usage, right? It's the fact that you can take a coin and you can use it at every exchange. It's accepted by everybody that's doing payments, et cetera. It's that network that gets built around it. And so this is a little bit of an organic thing rather than just a business thing. They overlap, of course. Often your business model will dictate who builds the best ecosystem around it. But those that build the best network, the most usable liquidity, will end up succeeding in the long run.
When I hear that, I think of like the easiest winners here might just end up being the big banks that already have the brand name and the so-called trust with millions of customers. If JP Morgan or Wells Fargo, well, Wells Fargo is a bad example. If JP Morgan was able to launch their own stable coin, people would be like, oh, I trust them because they already handle my money, and now they'll start using their JP Morgan stablecoin. Now, again, there's regulatory issues with that, but I just wonder if we're just going to be back to the same situation where we're just going to all be using the same banks, but instead of using, antiquated technology, it's just going to be, all through stablecoins.
Well, I hope that doesn't happen. I think for the good news is that history indicates it probably won't happen. So, BitGo transcends a little bit on the Silicon Valley side and a little bit on the Wall Street side. We're a financial services company, but we really have roots in technology. On the Wall Street side, nobody's read this book called The Innovator's Dilemma, which grapples with this question of why is it that big companies that have all the money, have all the distribution channels, have all of the great minds, over and over get eaten up by smaller, innovative companies. And of course, in Silicon Valley, we've been seeing this for decades. We've seen it with, hardware. We've seen it with software. People are familiar with this. I think the same thing's going to happen here. Frankly, the reason the financial services sector is different is because of regulatory. It creates an unfair moat that incumbents can use to defend their businesses. And so what's happening with stablecoins is those large businesses which have the most distribution. And by the way, they should win. Like if they can just get their head,
Get out of their own way, right?
they have all the resources, they have all the money, they have all the distribution channel. I still predict that they won't win, but they should win. Anyway, they are gonna struggle for all of the same reasons, and smaller innovative companies are gonna come in and win. I was gonna make another point, but I lost my train of thought. So,
Well, sticking with that theme, though, as we see stablecoins, become more and more popular, I see talks of tokenization of other assets, right? I think it was Larry Fink from BlackRock talking about how we're going to have tokenized stocks, we're going to have tokenized real estate, tokenized Pokemon cards. I'm trying to understand, though, especially with stocks and bonds, what is the point of that? Especially if I can already go on my favorite brokerage app, open it up, buy some stocks, I own it. What's the point of tokenizing that compared to the current system we have today? Is it just does it have to do with settlement time, things like that? I'm trying to understand that concept.
Today, all of these assets are kind of locked up in a few institutions that aren't very innovative and don't provide a lot of new services. But let's take a simple example in the crypto world. Today, if you have $10,000 of Bitcoin, and if you would like to borrow $5,000 of cash for whatever reason, maybe you need some new microphones for your podcast, you can go into DeFi, 24 hours a day, 7 days a week, take that loan. You're done. It's instant and very low cost. Now let's take another example. Let's say you had $10,000 of Apple stock and you wanted to do the same thing. Can you go to Charles Schwab and do that? As a retail person, nope, you can't. You can't get that done. But imagine if it's digital. Now you can.
I see.
So Robinhood is trying to build exactly this. BitGo helps companies build exactly this using the back-end technology behind the scenes. So that's just a simple example. But once you open up electronic communication between all these firms, the sky's the limit on what we can do. And previously, we've just been stuck where a small number of players keep a closed system. It's not open. So one of the things I think people sometimes confuse is what's the benefit of the blockchain from the transparency properties that it has, the immutability properties. These are great properties. They're really low level. Most people don't need to worry about it. But just think about open banking. We've talked about open banking for decades, and it makes some progress and then takes 2 steps backwards. One thing that's impossible to not do is to not create open systems when you're on top of the blockchain. So just opening it up is going to open up all kinds of features and avenues and things you've never even thought of before.
Do you think, speaking of open, do you think this dream of decentralization, though, is kind of dead for crypto, though? 'Cause I think that was what was the leading story 3-4 years ago. And now we're seeing just companies, whether it's new ones or even existing ones, coming in and consolidating, and it's all becoming more centralized. Do you think that we're done with decentralization? Now it's all about open and the other things that crypto unlocks besides just the decentral stuff?
Well, I certainly hope decentralization is not dead. It's a really important component, especially when you think about a global economy. So, one unsolved problem from the past is how do we have a global financial system to accompany the global economy? So the reality is we have vendors that we pick to do manufacturing in other countries. We have vendors we pick to do IT in other countries. But we don't have a financial system that allows us to connect these countries. The current system has grappled with the problems of regulation and how to work globally and mostly just punted. What happened is each country kind of created its own walls and said, it's really hard to go out of these walls. So just try to do international payments. I mean, we complain about domestic payments. The international is orders of magnitude worse, weeks with rejections and huge fees. It's terrible. All right, so the digital asset space starts to open this up, and it's going to change the approach to everything. So I think that's the big answer. Is it's actually about making sure that we can operate globally. In order to work globally, decentralization, you need it to be there. You're not going to get trust between all the countries and each other. People forget why did the gold standard exist? I mean, the gold standard wasn't a very good way to do it, but basically every country had their own fiat currency, and then how do you weigh how much a German mark is worth versus a US dollar? Well, each side put together, they said, hey, here's my gold, And of course, they probably lied and fudged. There's no electronic way to prove it or whatever. But they more or less said, okay, I've got this much gold, so you can do this ratio. You've got that much gold, we'll do that ratio. And that's how you did conversions globally. It was better than what we have today, which is there's no backing whatsoever of dollars and euros and everything else.
Well, it's supply and demand and the backings of the U.S. military, all that stuff. But it floats. It's not as tangible as gold.
The market decides what it is, and markets are pretty good. But at the end of the day, there's no strict way to know like how much a euro should be worth relative to a dollar. So anyway, we want decentralization for that. On the centralization side, I think the decentralization purists, while they're right that in a great world where humans are all nice to each other, decentralization would be pretty good. Unfortunately, the realities of life kick in. Businesses need to use centralized entities. I mean, you can't have like a CEO or an IT guy that can steal the company's finances. It just doesn't make sense. You use banks and you have business continuity. You have to have it. At the individual level, when it's your net worth and it's a lot of money, you want to make sure you can pass it to your wife or to your kids or to whatever it is. And the idea that you had it on a ledger in your own presence and you were going to protect it, it doesn't quite work. So we need a combination of both a decentralized network where everybody can be connected globally on a fair playing field that creates the global financial system to accompany the global economy. But of course, we're going to see more centralization come in. So there'll be a little of a pendulum swinging back and forth as the market sorts this out over time.
Yeah, I think the example that I always think of when it comes to decentralization, going back to 2021, 2022, messing around with these NFTs and all these other DeFi products and like being scared to death that I'm going to press the wrong button on my Phantom wallet and then I'm going to lose $3,000 that I'm sending to another address because I typed it wrong. There's no one that I could call. So I think that was a big barrier. Now that we're seeing more central, organizations pop up, I think it makes it a little bit more approachable. But it's a push and pull. And so I want to end here talking about just where we're headed, right? Again, I think you guys are in a good spot. You guys see where things are coming, where things are headed. What are you most excited about over the next 12 months? And is there a certain area where you think that we're going to see the most innovation, whether it's security, whether it's more with stablecoins? What are you the most excited about over the next 6 to 12 months as we really pick up steam in crypto and digital assets?
Well, I'm actually excited about all of it. If I have to pick one, I'm probably most excited about stablecoins and payments. I think we've got the legislation passed for that one. I think the time is now. Everyone can go on this. There's going to be an innovative cycle just on payments, which is going to be amazing. I think we get to start thinking about how do we build the banking system a little bit differently. And some people are scared of this. It sounds scary. It's not scary. There's regulated firms like BitGo. We're going to take care of all the transparency and the compliance, keep the regulators in the loop as we go through this transition. But we're going to see way better payments for everybody, and that's happening like right away. The tokenization components of equities markets, bonds markets, et cetera, you said it earlier. You don't have to trust me that digital assets are going to take over. The major asset managers, whether you're talking about Larry Fink at BlackRock or Abby Johnson at Fidelity or Jono over at WisdomTree, like all these guys are saying the same thing, that the digitization is everywhere. I think that's going to take a little bit longer. I think we do want market structure to get defined here in the U.S. I think foreign regulators are looking to the U.S. for leadership. I think we'll get there. But these experiments are starting to get a lot more serious now. So this is also exciting. Huge innovation again, and it's going to be a win for everybody.
Very exciting. And it also helps that the line on the chart just keeps going up. That always makes people feel a little good. So thank you so much, Mike, for your time and some of the insight. BitGo, you guys, like I said, you guys are at the center of all the innovation happening in this space. Appreciate the conversation today, and hopefully we get to do this again soon.
It's exciting. Hey, thanks for all you do.
Appreciate it.